This is your LMAX exchange technical update for Thursday, April 13th, 2017. Euro dollar. So the euro is doing a good job of being supported down by that key support in the form of the 78.6 fib retracements off of the 104.95 to 109.06 move and the bottom of the Ichimoku cloud, with the market now potentially putting in a higher low above 104.95 in favor of the next major upside extension back above that recent 2017 high at 109.06. At the same time, we still shouldn't rule out the possibility of a broader resumption of the downtrend if this market can't sustain this rally, with the possibility for a breakdown back towards the 2017 low. But of course, the market would need to establish back below 104.95 for that to happen, and until then, the risk for a higher low is in place. And if we see a break and close back above 107 on Thursday, this could reinforce the bullish outlook and open the door for a more accelerated move towards that retest of the 109.06 2017 high. Sterling dollar. So cable continues to be very well capped into rallies, and although we've seen the market put in an impressive rally over the past few sessions, we're back into some key resistance up and towards the 126 to 127 area, below that critical December 2016 peak at 27.75. So again, although we've seen this rally, the market is expected to be capped into this resistance zone in the 126 to 127 area in favor of another topside failure and resumption of declines. At the same time, though, we would need to see a break and close back below that recent support from this week, 23.61, to take the immediate pressure off the short-term immediate pressure off the top side and put the medium to longer-term pressure back on the downside for a potential resumption of declines back down towards the 2017 base at 1987, which guards against that critical 2016 October low, that plus 30-year low down at 118.40. Dollar yen. So dollar yen continues to extend its declines following that breakdown below significant range support at 111.60. This was a range between 111.60 and 115.60 for much of 2017, a 400-point range, and that break now projects a 400-point move to the downside, equal in size, which would take us down towards 107.60. At this point, rally should be very well capped, with only a break back above 12.20 to take the immediate pressure off the downside. Euro Swiss. Euro Swiss remains confined to a downtrend, and although this market hasn't really been going anywhere, overall this downtrend is intact, and a lower top is now sought out at 108.26, which will be confirmed on a break below that 2016 low at 106.24, opening the door for the next major downside extension in this market towards 104. Only back above 108.26 would compromise that outlook. Aussie dollar. So Aussie has seen a nice little bounce after the market had broken down below some key support at 74.92, but inability to establish a daily close below 74.92 does suggest that the market could see another bounce before it looks to continue lower. But consider the possibility of a lower top in the sessions ahead, somewhere ahead of 76, in favor of that next major downside extension below the recent lows that we saw down around 74.70, potentially exposing the next major drop towards the 70 area over the coming days and weeks. At this point, only back above 77.50 and really only above the multi-month highs up towards 78 would compromise an overall bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD is broken down below some key short-term support at 132.64, which could open the door for additional declines in the sessions ahead. But overall, this market continues to show signs of basing, and there is a more constructive outlook for this market on a longer-term basis, with the 2017 low intact, and the market still expected to find some support ahead of the next major upside extension back towards the multi-day peak at 136. At this point, look for setbacks to be well supported, ideally above 132 on a close basis, but only back below 29.69, that 2017 low, would negate a more constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is showing signs of a little bit of a bounce in recent sessions, but overall the pressure remains on the downside as this market continues to show more medium to longer term structural shift and topping out. Look for a market to be very well capped again on rallies up towards the 72 area, with a break back below some key support at 68.62 to accelerate declines towards 65. SPX 500. The S&P 500 is pulled back off record highs that we saw in early March, just over 2,400, but at this point setbacks are quite mild, and the market would need to establish back below 2320 some recent support on a close basis to suggest that we're seeing a more significant structural shift, a more significant bearish structural shift, which would then expose a drop down towards a measured move in the 2270 area at a minimum. But again, until we see that breakdown below 2320, the setbacks are mild and the overall structure remains constructive, with possibility existing for another push to fresh record highs beyond 2400 and towards the 2500 area further up. So again, 2320 is the key level that you want to pay attention to below to see if the market can establish a close below and force a structural shift. Gold. So gold continues with its impressive run. This is a market that continues to be very well supported on dips in favor of higher lows and higher highs. This most recent break above 1265 has confirmed a fresh higher low at 1195, exposing the next measured move towards a 1335 objective. That's just shy of the 2016 peak at 1375. From here, look for any setbacks to ideally be very well supported ahead of 1200, but with only a break back below 1195 to compromise the constructive outlook for gold.